Welcome back to Fanatical Finance, and in this video, I'll help you understand the stock market and talk a little more about the US exchanges. In part 2, I'll explain why a stock moves all over the graph and how you can start buying stocks. So, let's get started. You have probably heard the word stock market pop up on the news before. You may have heard you can create great wealth and have the financial independence you desire. But what is a stock market, and how does it work? The stock market is a global network of exchange where large sums of money move on a daily basis. The market does not trade goods, it trades securities. A security is a right to a financial asset like a business share. What is a share, you may ask? A share is a little portion of ownership in a company. So, when you're buying a share of a company, you're buying in a small part of ownership. You may be wondering why companies do this. Well, in order to grow their business, founders need resources. Companies typically sell shares to raise their capital and expand their business. Most companies start this process by an initial public offering, or better known as an IPO. This is when a company starts to sell shares to public investors. So, now this company is public and any investor who wants can buy a small ownership of the company. In order for the securities to go to the public, the company needs a marketplace to make their transactions. This is where the well-known stock market comes into play. There are around 60 major exchanges in the world. Each is unique and has its own advantages and disadvantages. The most popular exchanges in the United States are the NASDAQ and the NYSE, or its complete name, the New York Stock Exchange. The NYSE was founded in 1827 and is currently located in New York City. It is the largest stock exchange in the world. The NYSE trading list is comprised of nearly 3,000 companies and has a market value of around $28.5 billion. In the old days, humans controlled transactions for the exchange. They were called floor traders. However, now most orders are computerized. The Nasdaq was founded in 1971 and is also located in New York City. It was the first ever electronic stock exchange. Computerized trading truly changed trading forever. There is now more competition, less commissions, and lightning-fast execution speed. Day traders should thank NASDAQ for their innovations. So, back to the main picture. These exchange businesses raise money to elevate the growth of their companies. Let's take Netflix for example. During its IPO, Netflix sold 5.5 million shares at $15 per share. This earned Netflix $82,500,000 just from investors. Alright, the last thing for today. A company's stock price usually reflects how well a company is doing. Keep that in mind for part 2. Thanks for watching the video. If you made it to the end, please drop a like as it helps grow the channel. Also, subscribe if you like financial content. Lastly, please follow the Instagram if you haven't, at Fanatical Finance. Link is also down in the description. The account is very close to 1,000 followers, so a follow would be highly appreciated. Well, once again, thanks for watching.